Here are the crypto top headlines covered in this video. SEC's settlement gag rule undermines regulatory integrity, says Hester Peirce. Next, Bitcoin halving Hopium. Study reveals 84% of investors expect new all-time highs. Also, Ripple chairman Chris Larsen hacked for reported 213 million XRP, worth approximately $112.5 million. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, SEC's settlement gag rule undermines regulatory integrity, says Hester Peirce. Settlements are the most common way the SEC resolves enforcement actions, but this stops defendants from speaking out, says Hester Peirce. A United States Securities and Exchange Commission rule forbidding defendants from criticizing the agency's claims when settling enforcement actions undermines regulatory integrity and free speech, says one of its commissioners. In a January 30th statement, SEC Commissioner Hester Peirce disagreed with her agency's denial of a petition to amend its 1972 gag rule, which forbids defendants from denying or refusing to admit to the SEC's allegations following a settlement. The policy of denying defendants the right to criticize publicly a settlement after it is signed is unnecessary, undermines regulatory integrity, and raises First Amendment concerns, Peirce wrote. The rule states defendants must agree they will not make or permit to be made any public statement denying, directly or indirectly, any allegation in the complaint or creating the impression that the complaint is without factual basis. A defendant looking at this language is not going to have any idea where it stands, Peirce claimed. It effectively shields the Commission's allegations from criticism. The clause where defendants agree not to permit denials of the allegations is equally problematic, Peirce said, as it suggests they must stop others from saying things that could cast doubt on the SEC's judgment. This no-deny policy is a mandatory, non-negotiable term in its settlements, which are the most common resolution of SEC enforcement actions, according to Peirce. The SEC can also haul defendants back into court if breached. The regulator's crypto-related enforcement actions reached a 10-year high in 2023, with 46 actions against crypto firms and $281 million in penalties collected from settlements. The SEC explained when it adopted the no-deny policy in November 1972, it aimed to avoid creating an impression that a decree is being entered or a sanction imposed when the conduct alleged did not, in fact, occur. Peirce pushed back on this claim and wrote that before the policy, the SEC had decades of experience settling cases, with settlements allowing defendants to deny wrongdoing, which some did. Such denials do not seem to have undermined the Commission's enforcement program. She added other federal agencies, such as the Federal Trade Commission, explicitly allow settling defendants to deny the allegations of wrongdoing. Front up or shut up, big money needed to fight SEC claims. Settling a lawsuit is often the cheapest option to solve SEC enforcement actions due to the difficulty, time, and legal costs of fighting the government agencies in court, even for the most well-resourced corporate defendants, Peirce said. SEC investigations before negotiating settlements, along with the lawyers needed to respond to requests, subpoenas, and other notices, consume enormous financial resources, she added. It is unremarkable that nearly all defendants in commission actions settle. When the SEC does settle, however, Peirce noted it no longer needs to prove its claims in court, and its policy means it gets a benefit it could never obtain through litigation, the permanent silence of the defendant. She wrote that if the SEC is confident in its investigative work and analysis, it doesn't need to demand silence on the part of settling defendants. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin halving Hopium. Study reveals 84% of investors expect new all-time highs. A market study surveying nearly 10,000 cryptocurrency investors suggests that the majority forecast new all-time highs for Bitcoin following the halving forecast in April 2024. The fourth ever Bitcoin halving is driving optimism for new all-time highs for Bitcoin, according to a market study involving nearly 10,000 cryptocurrency investors. Data from a survey focused on investor sentiment and anticipation of Bitcoin's next mining reward halving by cryptocurrency exchange BitGet reflects investor confidence around the highly anticipated event. Results shared with Cointelegraph outline key findings of the study and its methodology, which aimed to draw from a representative sample of cryptocurrency investors worldwide. A range of demographics was covered, with participants hailing from countries in Western and Eastern Europe, South and Southeast Asia, the Middle East and Northern Africa, and Latin American regions. 9,748 people participated in the study between November and December 2023, with the data anonymized for analysis. 84% of participants expect Bitcoin to surpass the 2021 bull market all-time high of 69,000. Eastern Europe respondents were the least bullish on this outcome at a regional level, with 75% of respondents voting yes to BTC potentially surpassing its previous record. Investors from Western European countries were the most optimistic about the next price top for Bitcoin, with 41% of respondents expecting BTC to surpass the $100,000 mark. However, the report notes that investors from the region were less convicted about the Bitcoin halving impact on BTC's price. It may indicate that these investors are short-term cautious, long-term optimistic, as some Western European investors do not believe the Bitcoin halving will trigger a new bull market. Meanwhile, respondents from Latin America, East Asia, and Southeast Asia were the most optimistic that the Bitcoin halving would significantly impact BTC's price. 84%, 82%, and 81% of the respondents from the regions above foresee a substantial impact of the mining reward halving. In an interview with Cointelegraph on January 30th, Bitcoin proponent Paul Stork offered a contrasting view of the impact of the Bitcoin halving, suggesting the event would be a litmus test for the mining industry in particular, as rewards drop while the hash rate and mining difficulty continue to reach new highs. Stork suggests that the initial impact on price might not be as pronounced as some commentators predict. In an interview in December 2023, fellow Bitcoin proponent and cryptographer Adam Back told Cointelegraph that the next Bitcoin peak might come 18 months after the next halving. Several prominent mining companies gave in-depth predictions about the impact of the halving on their operations and the need to be highly efficient to remain profitable in one of Cointelegraph's 2024 New Year specials. Our next top headline, Ripple chairman Chris Larsen hacked for reported 213 million XRP, worth approximately $112.5 million. The alleged hack was reported by internet sleuth ZachXBT. Ripple co-founder and executive chairman Chris Larsen said on January 31st that his personal accounts had been hacked. The news was first reported by crypto analyst Zach XBT, where it was initially thought that the company itself had been hacked. According to Larsen, yesterday there was unauthorized access to a few of my personal XRP accounts, not Ripple. We were quickly able to catch the problem and notify exchanges to freeze the affected addresses. Law enforcement is already involved. The Ripple chairman didn't confirm the amounts, but per Zach XBT, the breach netted 213 million XRP, worth about $112.5 million as of the time of the event. The funds were reportedly siphoned, and then the perpetrator or perpetrators attempted to launder the XRP through at least 6 different exchanges. However, as Larsen's X-post indicates, law enforcement is involved and has currently frozen accounts related to the breach. It's unclear at this time whether the funds remain in exchange custody. Ripple didn't immediately respond to a request for comment. News of the hack spread swiftly. The price of XRP subsequently dipped by about 1 cent, but it rebounded quickly and remains near flat nearly an hour after the hack was initially reported. While it currently appears as though Ripple accounts weren't involved, thus indicating that XRP holder funds are safe, this could stand as one of the largest cryptocurrency-related hacks of 2024 so far. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.